Good afternoon, traders. It's Bill Baruch with Blue Line Futures and it's your daily midday market minute. We're seeing the equity market hold pretty well, so let's get to it. It's 4,500 in the crosshairs for the S&P. Previous record highs, 4,475. That area has been good support, allowing for good construction and to test into 4,500. Now, the NASDAQ is about unchanged on the day. 15,400 has been resistance, keeping the market in check. So has rise in yields. You're seeing the 10-year move up to 135, and it's almost a 2-week high in the yields. You're seeing obviously the futures press lower, and we had some recent selling here in the last hour after that 5-year auction. Underwhelmed demand, decent forward demand again, but you're seeing the yields rise up after that, and you're seeing the dollar. It's kind of just trading around 93. It looks like it's waiting on Jackson Hole, but that demand, that lukewarm demand in the auction definitely gave the dollar index a slight bid. So that's holding back the NASDAQ, and you're seeing these value stocks, cyclical stocks, reopening stocks, whatever you want to call this group here, make the move. And it's the Russell 2000 leading to the upside, up about 1% again, 2250. This is an area that we've seen stall going back a couple weeks a number of times. It's been very difficult. Well, before, though, the 50-day moving average was in that range. Now we're through the 50-day moving average on the open today, 2236. So let's see where this thing closes, but got a lot of resistance, 2250. Is it going to be sustainable if tech doesn't continue to join? Is this sort of just a grab for anything that is undervalued here, that's lagged in the last month or two? So keep an eye where things close here today. I think it's going to be pivotal. And do the treasury yields continue to rise? And does that weigh on the equity markets going into Jackson Hole? Now, crude oil holding pretty well, 68 bucks. Resistance we've been talking about, 68 and a quarter, has kept rallies in check. Today's inventory data was supportive. I mean, overall supportive given expectations, given API last night. You're seeing net imports pick up a little bit, and you're still seeing the bigger headline draw on crude, draw on gasoline, although refinery utilization wasn't really, just really in line. But what was it, 0.2 pickup week over week. So good to see crude hold ground, but I think a lot of this bullish report was priced in. You have resistance now at that 68 level. Can we chew through there, or does it start to fall back? That's something too to keep an eye on. With the Russell as well. The weaker U.S. dollar this week has helped underpin commodities in general, helped underpin crude oil. It did help underpin gold and silver early on in the week, as well as copper. Gold and silver falling back with those rising yields. Silver holding much better now. Silver's been the laggard for the last couple of weeks, and now 24 bucks. It's testing into. It's good resistance there in silver. Now gold has fallen back fairly sharply into today. Failure at 1808. That was a previous close, and it's had the bull flag move, and it just couldn't hold ground. Sellers have stepped in. Good support in gold, 1780. This is a level we battled at through the end of last week and through Sunday night before it moved higher. So keep an eye on 1780. If it breaks below there, we could see another 1% move lower. So we're here. Give our trade desk a call, 312-278-0500. Remember though, futures trading involves substantial risk of loss and is not suitable for all investors.